The South African Reserve Bank met with market expectation today, leaving interest rates unchanged. Stephen Meintjes of Imara SP Reid joins me on the phone now. Firstly, Stephen, can you talk us through the central bank's thinking today?
Well, in a nutshell, and I say in a nutshell because the governor gave a very, very comprehensive assessment of all the risks, all the problems, the upside risks to inflation and so on and so forth. But it appears that the governor and the MPC believe that the upside risk to inflation, and I think it's common cause, that inflation will breach, perhaps in next month, it'll breach the upper limit of the 4 to 6% bands that are tolerated. And they believe, however, that it will not be for long, and therefore they do not need to hike rates at this juncture. At the same time, the governor was careful to outline the limitations of monetary policy and highlight the need for other players in the economy, in particular the government, to come to the party and take action to improve the situation.
The bank's growth forecast for 2013 has again been revised down from 2.4% to 2% and from 3.5% and 3.3% for 2014. There has been much discussion this week regarding the EUSA trade relationship, with claims that relations need to be enhanced in order to improve the growth of all countries involved. Is this a standpoint that you would agree with?
Well, the preface to your question certainly highlights that 2%, or implies that 2% is not good enough for South Africa. It's way below what we need to get rid of unemployment or to make an impression on it, especially with youth unemployment at 52%. So, yes, we need more growth, and for that, optimal relationships with our main trading partners is necessary. So our local media played up the apparently rather stringent comments by the European delegation at the beginning of the talks, but the South African delegation said no, the talks were proceeding satisfactorily, there were no major problems. So yes, I do think it's necessary that both parties can satisfactorily resolve any problems and issues that they have.
South African bonds have held steady this week ahead of the rate decision, but with trend currently favouring the selling off of EM bonds, how long is this likely to continue?
I think certainly just looking at the recent trend, it looks as though there would be possibly a gradual weakening of the bonds, in other words, gradual rise in the yields to maturity, but not necessarily out of line with those of other emerging markets. We seem to, and in fact the governor repeated several times in her talk that we were really, to a large extent, the victims of the changes in policy of the Fed and the ensuing effect that had on emerging markets.
And lastly, the South African rand had been expected to come under pressure this week. We also received indications today from the central bank that the slowdown in QE may begin sooner than previously anticipated. How is this likely to impact rand performance?
Well, clearly, a stronger dollar would tend to make for a weaker rand, as it would for other emerging market currencies. There was no immediate reaction in the rand after the talk, and as we're speaking now, it still hasn't really reacted much to the decision to hold rates steady, which, as you say, were expected. So I think it will affect the rand, but in the same way it will other emerging markets. I think the governor, and I said this at the beginning, the governor did allude to the need for other players in the economy to take action, and I think one could be more specific about that. One could say the government needs to address our labor issues so that they're no longer perceived as being so problematical. That needs to be resolved, and the government also needs to perhaps take advantage of low interest rates such as they are now to raise funds for infrastructure, because everyone agrees that we need a lot of infrastructure spending, and that would be very useful to generate higher economic growth.
That's all for now. I'll be back tomorrow with the last Targets in Focus interview of the trading week. Goodbye.